Hey, it's Mac with PriceActionTradingSystem.com, and today is Tuesday, March the 5th. This will be our chart lesson for today. We had a really strong uptrend early, and we kind of plateaued and broke, flattened out, went into this range here, broke this channel, and moved to a new top, and now we appear to be selling off. Um, Really, I would characterize this more as a failed break out of this range than at this point. So we'll have to see what happens from here. We may break out the low side and reverse and continue higher, or we may just sell off. Um, we just have to see what happens. But it was a little interesting today. I got a bunch of emails from different people saying what a good day they had today. And basically all they did was follow the rules of buying all the pullbacks to the EMA and the trend line. And because they followed the rules, they really did well today, and so I was glad to see that. I didn't get any email. Actually, I take that back. I got one email from a guy, but I think he was talking about yesterday that he struggled a lot, and yesterday was more of kind of a weak uptrend. They had that weak channel, if you remember. But today, when you see all these little bitty bars that are continually above the EMA and just keep going higher and higher, that's really a strong trend. It doesn't look like it, but it is. And what I believe today was, I haven't seen a day like this in a while, really. I believe this is really a spike in the channel. We started out really strong, but the trend was just too strong, and the market couldn't maintain it, and it flattened out to more of a 45-degree angle, and that's what you expect to see on most strong trends. But even if you use this original channel, we broke it, we had a couple of legs up, and then we went into our correction, which is exactly, you know, what you expect to happen. And I have to remind people of this. Usually when you get a trend line break and the new high, a couple of legs up to a new high, normally you will get some kind of trend reversal, but that's not what the rule calls for. The rule says that you will get at least a correction that lasts at least about an hour or so is what we normally see. And you can see that we more than met that criteria right here already. So this is a correction. We didn't really ever sell off hard, but this is a correction that lasted, of some period of time. And I would really, because this is a spike in channel, I would really think this was the more major channel. We broke it here, and then we have a new high, and now we're trying to sell off. But this has been a trading range, and this is still going to be an important area when we get down here. So we'll just have to, like I said, see how it sets up. But for the most part, even if you found this channel first and used it, you still got your break right in here, a couple of legs up, it went a little further, and then we had the correction. Uh, so it doesn't really matter how you saw it, but when you notice a trend that keeps going, it may be just that the trend was too steep or too shallow, and it changes it slightly. And I believe this is just what you call a spike in channel. Usually the spike is more real quick like that, and then it kind of goes into the channel. But this was, these were those small choppy bars, but still we kind of spiked up, and it's really just too steep here. And then we go into a more manageable trend that's, at a 45-degree angle. So that's what at this point, that's what I'm characterizing, that this kind of was a form of a spike in channel. I haven't seen many that look like this one. Usually the spike up's real sharp, and then, it's not jagged legs like this. But either way, you can't disregard this channel. We're in this channel, and you can see every time prices came back to it, there was a great opportunity to make some money. And but the main thing was just to watch the fact that we're above the EMA all the way up here. We've got a little bit below it right here. We never really, I wouldn't, that's really just a pull back to the EMA trendline area. We got a little below it here, again here, but here we're on both sides, and you can see that clearly, and that's just a trading range, and that's usually a good sign. If prices are mostly above the EMA, we're in an uptrend. If they're mostly below, we're generally in a downtrend. And if they're on both sides, we're in a range. And that's real clear right there. And you can see how flat the EMA is and how we're on both sides of it. That's a good signal that we're in a range. And the rest of the morning, you can see we're clearly above the EMA all the way up. That's a good sign that we're trending up. And you can see prices are steadily going from the left side, low side, to the right side, high side of the chart. And but anyway, a couple of things. I wanted to say thanks to everybody. Today I didn't get a lot of emails today. I got a couple that I got in over the overnight. I tried to answer them as I could this morning. I appreciate it. Today felt much more manageable for me. I was able to trade without a lot of distractions, and I appreciate it. And again, I don't want to discourage anybody from sending emails. If you got questions, you can still send them to me. Just try not to send me a whole lot of them during the regular trading hours. Wait for the video and see because a lot of times I'll answer your questions in the video, because a lot of the questions I get are we in an uptrend? Are we in a range, or are we trending, or that kind of stuff? And that's the kind of stuff you need to be learning on your own anyway, and you'll get that answer by the end of the day. So just hold on those kind of things, and if you don't get something answered that you've got a question about, I'm happy to answer it. Send it to me after the video if I didn't answer your question, and I'll be glad to. Also, I've gotten a couple of emails or people suggesting some things to do some videos on, and I'll probably use those suggestions. And but what I'll probably do, if there's something real simple, I'll probably add them to the daily video. If they're more complicated, I may just do an individual video and post it on the website kind of deal. So keep your eye on the website, and I'll usually tell you if I put something interesting over there. We try to keep it updated with at least an article or two each week, just to keep the information fresh. Somebody did ask me yesterday, they didn't understand where the gap was on the chart, and that gap is right here. Notice how there's no overlap. Look how every bar there's some kind of overlap, and then we closed right here on Friday, and then we actually opened right here on Sunday. So there's a gap right there. We tried to fill it right away, but it sold off. And so notice how this move comes up and fills that gap, and then it tries to sell off again. So there's your gap that I was talking about. Hopefully you can see that. But there's where prices closed on Friday, right there where the horizontal line is, and that's where they open. And the gap is what's between that close and that open. And we filled part of the gap, but we never could fill the rest of it. Notice right there, there's no bars overlapping between there. So there's your gap for whoever it was that asked it. I can't remember who it was. I usually don't call names anyway, but for the person that asked me about the gap, that's where it is. And I'm trying to think a couple of more. Here's a couple more questions I got. Somebody asked me, how do you detect early if the trading day is a range day or a trending day? All you can go by early is what you've got at that point. And, I say this a lot. Trends can have ranges within them. Ranges can have trends within them. And you just got to go with whatever's there. And, I mean, this is obvious. Look at all the prices are above the EMA. Every time we come back to the EMA or the trend line, we get a surge. That's a trend. But notice this little trading range right here, right in the middle of the trend. That's all that is a trading range. We're right there in the middle of a nice trend. And we got another little congestion range area, another little one. And so there's ranges within ranges. There's trends within trends. There's trends within ranges, and there's ranges within trends. So really, you just have to look at what you have at the time. And a lot of times the market will open in a trading range, and then it'll turn into a trend. And a lot of times the market will open trending and trend and then go into a range just like that. So you just have to go with what you see. And if you start seeing a flat EMA, just like I talked about with the EMA, this is a good clue. Look how steep and straight up that EMA is, and every time prices come back to it, what happens? And this is what will usually happen. Usually you won't just suddenly run to a new high and then sell off and start going the other way. What you'll see is you'll start to notice how we're not getting any closes really below the EMA, and then finally we get a couple of little minor closes, then we get a little more below and a little more below and a little more, and then we and then we try to kind of trend off. So, but here it's real clear that you're on both sides of that EMA. That's a good sign that you're in a range. So that's really the best answer I can give you there. It's just experience, and with time, you'll recognize what's going on. I mean, things like, are we trending or ranging, or just, I don't even, that just comes like second nature to me at this point, but I've had a lot of experience watching prices. So, and so that'll come to you with time. Somebody asked me what to avoid. What's the biggest thing you want to avoid? The biggest thing you want to avoid is counter trend trading. Look what would have happened anytime you tried to go short here, but look what happened anytime. You can buy and be wrong if you're buying with the trend, because you may have to ride back this pullback to the trend line, but even if you bought in the wrong spot, you still are going to be okay, even the way up here. But if you counter trend trade, notice if you'd have went short in these places, those trades, they don't come back and you're in trouble. So the biggest thing is do not counter trend trade. That's why you don't see me mark many of these shorts. There's a good chance they work out. A lot of these are good trades, but you never see me mark them because they're just not high probability, and most of the time you're going to lose money if you trade them. So and one other question, this same person asked me the differences in trading types of trends: volatile trend or typical ES grinding non-file. It doesn't matter a trend is a trend, and what you want to do is buy the pullbacks to the trend line, and if it's really strong like this, the pullbacks to the EMA. When you're pulling back to the EMA and the trend line, like in here, they're really usually solid trades. So just keep that in mind, and that's the best I can answer that question. So, but let's talk about the trades. We'll wrap it up today. And again, many thanks for reducing the emails. Yesterday, I really felt overwhelmed, and I wasn't able to concentrate on my trade because I want to answer questions for people, and I feel obligated to, especially people that have bought our manuals and things. And so it's hard for me to say no sometimes. I'm a workaholic, and you've heard me probably say that before. So if you can limit the emails to after the video, and if I don't answer your question, send them on, and I'll answer them when I can and my spare time, and we'll go from there. But again, not trying to discourage anybody from ever sending me an email, because I do always answer emails. It may take me a little longer sometimes, but I will always answer your emails. That I promise you. So, okay, enough about that. Let's talk about the trades today. There were several of them. There weren't a lot of runners on some of these. They came back and got the runners fairly quickly on most of them. There were a couple of them that got some runners. A couple of them I marked in green there. We'll talk about that too. Let's see. I didn't get here till a little after 8 today, so the first trade I saw that I liked was this one. It's a pullback to the original trend line. Notice that little bounce. You had these little two matching lows. I tried to get long with a limit order there. It didn't work, so I had to go long above the bar. It didn't matter. It took off real swift. And guess what? Runners were safe on this particular trade. So if you got this trade right there at the open, it's a breakout pullback long. It's a pullback to the trend line, to the EMA. It didn't quite get the EMA, but it did get the trend line. So it was a nice setup. There were a couple of different reasons to take it, and you can see it explode off. You had these people gambling on a short right here, and they all got short. And you know that because look how this thing exploded out there. They hit the stops, and they all got blown up. Basically, that's the only way to describe it. So nice trade there right out of the gate, and like I said, any runners were safe. And somebody asked me how I manage my runners. I exited as soon as we touched this other side right there. I wasn't sure that we had touched it yet because I started with this kind of up here, but when we went to that overlap, I exited on one of these couple of bars here, and I pulled this down, and it just fits pretty well right there. So I believe that's your trend line, your trend channel line. So I exited right in here somewhere, and my reasoning was because we reached the other side of the channel and there's likely to be a sell-off, and you can see that. Uh, so could I have got more out of my runners? Yes, but I just prefer to re-enter and get everything I can out of that runner, because you never know which high is going to be the last high of the day. And generally you want to get a trend line. And in one way you might manage that rule is wait until you get a break of the trend line um, before you exit. But you know how that goes. Sometimes you can get a lot bigger correction than that, and it comes back and takes your stop out, because you can't let it go back and take any of your original profit back. You just can't do that unless you're trying to do something other than scalping. If your majority, of your trades are set up as scalps like I do, I make my money scalping, and I get my bonus checks with runners. That's the way I look at my trading. If you're more of a swing trader and you're just using the rules to get into the trade and you're trying to stay with it longer, then you probably want to manage your stops differently. But that's how I manage mine. So I usually exit it at some logical place. And another thing that you can look at here is we kind of had this measured move right there. And if you measure that leg, you can see it's almost, well, it's a perfect measured move to right there. And so that was another, that's another thing I look at. So when I get a measured leg right to the other side of the trend channel, then that's a clue for me to get out. Again, this is a good reason why you don't really short here unless you got in off these highs. You might have used a limit order to short right there. I don't really teach that or talk about it a lot, but notice those overlapping bars way away from the EMA. You drop a limit order there, it ticks up, but sometimes it goes higher, and so it's a risky trade because it's counter trend, but you see it would have worked easy. You come back. Even if this was the only channel you saw at the moment, I drew this trend line across here because it was obvious there was something going on across there. And so not only did we get the break here, but we got a perfect touch of it and turned up. And I went long right above this bar. Nice move. It's actually two legs to a new high. And then we had a bigger correction. I don't know if that one lasted. Let's see how long that correction lasts. We started correcting at about 9 and it ended. That's not very long. Doesn't really fit our rules as far as the hour correction or whatever. So, but we did have a bigger sell-off there, and I guarantee a lot of people thought this thing was over. But hopefully you noticed these bounces coming up through here, and you noticed that everything's above the EMA, and this was a great place to get long right here. When we made those two little matching lows that were equal to that right there, I dropped a limit order there. It ticks down, so you get long from one tick off the low and it takes off. Otherwise, you had to wait on the trap, and that would have been going long on the other side, or either waiting for that to break through and then dropping a limit order in. But if you dropped it too far, it took off without you. You could have gotten right there at the end of the bar, maybe a tick into it, and that's about it. Otherwise, it would have taken off without you. And if you put it actually above this bar, you probably would have at least gotten long right there. And that's really the rule on that. If it goes lower first and you know it's a trap, if you can put a stop order above that other bar, but if it doesn't fill it, then you want to consider waiting for it to break above and then dropping further back in or something. But if it breaks lower and then breaks higher, that's generally a good sign that you've got a trap. And of course, if depending on how you entered, your runners would have been safe on this. If you didn't enter till up here, no runners. But if you got in down here off the little double bottom in some form or fashion, which you might have got in right there, and as long as you got in there and kept your stop 2 ticks below that little signal bar right there, you were still safe. You had to write all that out, and you might have, scratched that trade. But this is pretty common to see this. You'll see this double bottom, and you'll see those little 1-tick traps. Notice that you'll see them a lot, and they're usually great setups. And depending on how you got in this one, you had runners, but maybe not. And I think I skipped this trade right here. I drew this one in green because we already had a little break. We had a new high. and there's a little bit of overlap here, but this is a breakout pullback long, and generally you get 2 legs up. Even if this was the end of the trend, and you usually get 2 legs up before you start to get a correction. So this was almost worth taking. If you saw it, it's bouncing off the EMA. It's a second entry long off this low. There's a lot of reasons to think maybe going long right there, especially on this trend this strong. So I marked it in green because it's a little more aggressive. But if you saw it and took it, it wasn't a bad trade. I already talked about this one. And again, here, this is the same identical thing. There's a lot of overlap here. There's this attempt to go lower that reverses. That's a nice reversal bar. There's a little bit of a trap there. It's a breakout pullback long. There's still a lot of room between there and this possible upper side of this channel if you'd found this. So, and again, everything's still above the EMA, and we're not even getting back to it. That's a strong sign. You might have gotten shaken out when it went into here. I'll be honest, I entered here, and I exited right here, everything I had. So, okay, had a slight interruption there. I think we were talking about this trade. I did enter here, and I exited on this doji. When we entered as a doji there and couldn't go any higher, I exited. And I exited all my runners as well, so I really screwed up right there. But better safe than sorry. And somebody asked me about that. How often do I scratch out, and how do I manage my trades? I don't really scratch out that often on a more aggressive entry like that where I doubled up. So I already still had my runners from here, so I added another load right here, just another full set of contracts. And so you're starting to pyramid right there, and so, you know, and I had a good bit of money in my runner, so I didn't want to lose them. So I'm more apt to scratch out then than a new trade. So, and I'll talk about another one over here in a minute and show you how I managed it. Again, tried to get long on a limit order here, couldn't get it filled. And so got long above that bar. Easy scalp right off the, you know, hopefully you found this channel by this time. I mean, when you see it bouncing continually, I mean, you can eyeball that without the line there, and you can see that something's going on, but notice how it sticks out once you put the line on. That's why I'm always telling people you gotta draw your lines, because now it's crystal clear. And so I'm always drawing my lines, checking them, moving them, readjusting them, because sometimes these trends will change. You know, this might have started out down here, and then we were bouncing ahead of it a little bit, you know, I tighten it a little bit, and then you see it fits better. So constantly check your lines and, you know, move them around a little bit, readjust them if necessary, because, you know, they do change slightly based on, you know, the more recent the price action, the more you got to pay attention to it. And like right here, we're in a trading range. So this is more important price action than whatever was happening way back down here. So just remember that. But anyway, again, this was a more aggressive entry. It's just kind of a repeat pattern to that right there. That's another thing. It's a repeat pattern. And remember what we talked about, repeat patterns. You know, if you see it once in the day, you're likely to see it again. And so just be prepared for it. But anyway, this trade right here, you got another pull back to the EMA or the trend line. It touches, it goes up. You could have gone long above that bar, but definitely that one. Easy scalp. That was, this one moved fairly quickly. And then guess what? We could break above this double top right off that channel line. I mean, you can see that. And you might have had this a little, you know, I had it off those, basically off those first couple of lines right there, and you can see that it touched there. That's where I exited right there. I actually had this line off that high right there, and as soon as I always just move it up enough to where when it ticks up and touches the line, it'll take me out. And so I just went ahead and exited there because it was a break above these highs as well, and there was a good chance it was going to pull back. We really kind of had a little two-legged correction back, a bounce right there. Again, you go along right there. This one got just enough. You might have scratched out right here. I actually only took 3 ticks on this, but it went ahead and ticked through eventually. but I wasn't going to hang around because this has been real strong resistance, so I just took the 3 ticks it gave me. So there's another place where I exited without getting my 4 ticks. It would have worked if I'd have held on, but I didn't risk it. And you see, it's just not worth trying to get one more tick when you know you've got strong resistance, and next thing you know, it's way down here. So if you hold on, you get stopped out and you don't get anything out of it. As long as you had your stop below the signal bar, though, notice what happened. You never would have gotten, even if you held on. And then notice here, there's another entry here. In this area, I drew this rather large because there's about 3 different things you could have done here. Again, when you had this small bar, you can go long right there, and your stop goes down here below your signal bar again. And this is been strong support. Now you got a little double bottom, and guess what? It ends as a doji, so you might have thought about scratching out of this one. And it only, if you entered right above that, it only went 1, 2, 3 ticks. You can see that. And then you get another doji, then another doji, and then you got this negative bar. So that's a good reason just to go ahead and scratch that trade and see if you can't get another entry. And you might have even gone long above that bar. And if you did, you would have been long right here. But that's a fairly large bar, and by that time you got a lot of overlap. But that's a reversal bar, and that's 2 tests of this low. It's already kind of a double bottom, so it was real tempting to go long right there, but you can see what happened. It ends in this doji. And that's, when that happened, I would have probably scratched out of that trade because you don't want to give it a chance to come down here and tick a tick or 2 lower and end up with a big loss out of it. So get a ticker or 2 or whatever you can get out of it, or scratch, because look what happened later. Now you got a failed second entry short that turns up into a second entry long, and look at that move. That thing was easy. And, and this one goes on and breaks through. Any runners would have been safe. You could have ridden this when you saw this, when you saw this bar, but definitely when that reversal came, if you weren't out, I would have been out. A nice short right there. This is a trading range. It's the first breakout of it. Generally, they're, with a reversal bar like that, you just can't ignore that. And that was an easy short, and that was the last setup we've had today. So really good trading day, and I believe that multiple people had a good trading day because I got a lot of messages and people, saying, hey, I did really well today, and all I did was follow the rules. And the rule they're talking about is basically because everything was above the EMA, they were buying two-legged pullbacks to the EMA and the trend line. And you can see that. You could have done that all day and made money. And, the only reason I didn't mark more shorts up here is because this was an uptrend, but you really had a couple of shorts off these high sides. And another thing I meant to tell you about this long right here, one thing that, I didn't like about it is you're getting long in the middle of this range. And you can see what happened getting long, especially on this one. This was a failed second entry short. So this one had the trap, and it was much more, this one was worth taking. But this one wasn't here. That was another reason not to take this second entry long, because look how close to the highs you're getting long, and you just don't have room, and there's no trap yet. In fact, it looked like it was going to be a long trap that turned into a short. But by the time the short triggered, you had all these overlapping bars, and guess what? That's just a little congestion, and guess what happens when prices break out of congestion? Boom, they reverse. But now you got a failed second entry short. Notice your new low here. First entry short, pull back, second entry short, and that's a nice bearish bar, but no reason you'd even think about going short right there. And it just traps people that try to counter trend trade, and you go long right there, easy scalp, and you're off to the races to the upside. And notice it didn't go far, but it went far enough to get runners and get a couple of 3 points out of it. So keep that in mind. And but this is a good example of why we tell you not to counter trend trade. And right here's a good example of why we tell you not to enter in the middle of the range. You got to wait on some kind of trap or something. And I'm really surprised that this didn't tick lower here. I actually tried to get long a couple of times on limit orders across here, and I couldn't get any of them filled. I didn't try here. I was done by this time. So, but I never could get a limit order filled on any of those trades. And I hate that because those are just gimmies almost. Even if the trade doesn't go anywhere, they're gimmies usually. So, and you see what happened here. We were in this range. We broke to the high side, failed. Now we're breaking out the low side. Possibility we'll probably fail and come back and or do a breakout pullback short. So it's going to be interesting to see how what prices end up doing. So, but anyway, this is 30 minutes. I'm going to wrap this up. This is longer than I wanted to go. But hope you had a good trading day. Congratulations to those that did email me saying you had a really good day. And if you're not doing so well, just make sure you're on the simulator. Don't worry about how many trades you take every day. Trade as long as you can and take as many trades as you can that you think meet our goals, our criteria. And then don't even worry if you win or lose. Don't let it shake you. Don't let it do it. If you win, that's great. If you lose, hey, you got to get the next one. And then at the end of the day, go back and study, figure out what you did right, figure out what you did wrong, concentrate on it, and try to do better the next day. And if you do that every day, eventually you will slowly start to get better, and it'll slowly start becoming second nature to you. And what you'll happen, you'll get to the point where you can glance at a chart and you'll spot all these entries after the fact real easy. And but eventually you'll start noticing them in real time, and you'll say, hey, there's the setup, and you'll take it and it'll work like a charm, and you just grow from that. And that's how you do this. It takes a lot of hard work. It takes a lot of study time and a lot of effort. And it doesn't come easy for most anybody. I don't know anybody that really comes easy to. Very rarely does somebody come to me and I show them this stuff and it's easy for them right out of the gate. But it works if you can learn it and you can follow the rules. The hardest part is just sticking to the rules because it's so tempting to counter trend trade. This was the first one that I really felt was worthy of counter trend trading because you knew then that this is a trading range. It's obvious that's a trading range, and that is a huge reversal bar after odds were probably, there's two legs up, there's probably strong odds. As strong as that bar was, I guarantee a lot of people got trapped right there, and they took advantage of them. And now they've probably trapped all these shorts. They probably trapped all the longs out for sure by breaking below here, and they probably added some new shorts, so it wouldn't surprise me now to see it run back up again. So we'll just have to see. It could be a breakout pullback short. I mean, this trend looks like it's done what it could and it could possibly sell off, but I'd be real leery until we get the right setup before I'd be going short out of here. So, but anyway, I'm going to wrap it up. It's Mac with PriceActionTradingSystem.com. We'll see you next time.